Hello, my name is Mike Butz and I am the owner of MBhealth Insurance Agency here in Afton, Missouri. And in a series of just some general information and some topics, today we wanted to talk about and introduce the general topic of life insurance. Of all the areas of the insurances that we deal with, this can be one of the more traumatic ones. We do have the events where we have a sudden death of a caregiver, a child, a business partner, some relationship, and there's a major need now for cash. The cash can be used, and that's where the main thing I would associate life insurance. We can all have the sales commentaries and critiques, but life insurance is just cash. It's cash that comes in at a very strategic and key moment when there's just been a sudden loss of the income or the assets or the value of the person who had just died. So that impact, the loss of that income or that salary or the position of the person who just died, varies with age. So I am not equating human value here and the emotional toll. I'm talking just the finances. So whether it's a newborn or whether it be a senior member of the family, there's a loss of a person, and now we need, in certain circumstances of that age, we need cash. That cash could be for the surviving dependents. So life insurance, the number one topic in its use, is for a person who would have dependents. Who are those dependents? It could be I'm married with children, and now my household needs that money. It could be dependents of a business owner who has their business. They're tied up in their business, and the loss of that key owner, now that business needs cash. So they need cash just for operations and for ongoing expenses. Typically, we put the association of the life insurance discussion with debt. So yes, for a family to cover a mortgage, the college educations, funeral expenses, healthcare expenses, all those are issues. But the general guidelines for a family, for a person with dependents, is I would encourage, do not focus on the debt, focus on the loss of the income. So if I'm a person making $50,000 a year to my home, how do we replace that $50,000? In general, life insurance, a person should carry 5 times my annual income. Ideally would be 7 to 8, but at a minimum 5 times my income. So if I'm making $50,000 a year, that person should carry at least $250,000 to maybe as high as $400,000. So then you want to add to that debts, special considerations. Maybe you've got a special need dependent child that's going to need ongoing care. All those topics are things that need to be explored and discussed, whether it be for your home or for your business. Please call our office at your convenience, 314-544-5400, and we can talk these things through.